Okay.
How do we determine interest rates in the real world?
Okay. So she said, how do we determine the interest rates in the real world? So you would most likely look at if you were going to borrow money from a bank to buy similar assets, what's the rate the bank would actually charge you? Okay. So what's the rate the bank will charge you? That's the easiest way to do it. Okay. So probably in Nigeria today, you should be looking around MPR. MPR is now 27.25%, Abi. So just add like 5% to that. So that will be around 30 something percent on that. So, and again, that question, I like it. When we're doing IS 19 to employee benefits, I know it's been long you revised it, but that too made use of discounting when we are getting like the current costs, like the PV of defined benefit obligation also. That also the rates used practically, that they usually use rates of a risk-free investment, risk-free. Like I think the government just recently issued some treasury bills, 150 billion, and they gave 24.25%, right? So that is for those employee benefits because we believe that where you will have invested those money are risk-free assets. So that's why we use a rate for a risk-free environment. So it depends on the nature of the transaction that will ultimately determine in practice which rate you want to use. Yeah, it's highly risky. So if you're going to borrow money from a bank, what's the rate the bank will have charged you? Would be most likely what we'll be looking at. Okay, let's saw accounting. 15 minutes. I'll just quickly wrap up. 10:30, I'm out. Okay, now for the lessor, IFRS 16 says that the lessor needs to first of all establish what is the nature of the lease he has entered himself into. What is the classification of the lease? It doesn't require that for lessee. Lessee is so straightforward. Lessor, we need to establish what's the nature of this lease. What's the classification of the lease? And there are two classifications of leases. What's it? Operating lease and what? Finance lease. So the lessor needs to know, am I in an operating lease or am I in a finance lease? And getting the difference in the exam, they will tell you. They will tell you whether it's a finance lease or an operating lease. And to even know the difference is very straightforward because for a finance lease, it's clear that the lessor has transferred substantial risk and reward attributable to ownership of that asset. Finance lease is always similar to like he has sold the assets. It's always very near to that, like he has sold the asset. So we say he has transferred substantially all the what? Risk and reward. Of course, if it is not a finance lease, then automatically it becomes an operating lease. So the examiner can ask you maybe that explain and mention indicators of a finance lease. So you already know one, that he has transferred substantially all the risk and reward attributable to ownership. So what are those things that you will see that will show us that yes, this guy has really transferred substantially all the what? Risk and reward. So can you tell me? Indicators. So number one, the lease term is almost equal to the what? That makes sense. And that's very practical. Because when the lease term, the useful life is 5 years. Lease term is 4 years. Kiloku. is as good as you have sold it. Which one again? Yes. So all the payments you are making, this, all the money you are collecting from the lessee, meaning the minimum lease payments or the PV of the lease renter, is almost the same thing as the market value of the asset or the cost of the asset today. Kilo tuku. The PV of what? Of lease rental is almost equal uh, uh, is almost equal to the what? Is almost equal to the market value of the asset. Number three, which one again? Where there is a purchase option. I explained purchase option earlier on, where the lessee has right to buy the assets at the end of the lease term. So where there is a purchase option at a price that is very small, at a price that is very small, that when you compare that price to the market value at that time, you see that this one is small now. He has transferred, he has transferred risk and reward to the guy. So where the purchase option is very small when compared to the market value at the end of the what? At the end of its lease term. The purchase option is very small when compared to the market value at the end of the lease term. Number four, you are the one that is telling me all of this, and you are surprisingly right. Number four, we have talked about the lease term is almost equal. Lessor to incur it. Yeah, it makes sense. It makes sense, but that might not be an indicator that is a finance lease. Oh. Yes, it might not be an indicator because it might it might be the river. The guy might just choose to maintain it. That does not show that risk and reward has been transferred. It might be. It depends on the contract. That does not show that risk and reward have been transferred. Okay, you're welcome back. We actually said when you we actually mentioned that when you were sleeping.
The identified assets does not actually need any changes or modifications for the receipt to use it.
Okay, if it doesn't need any modification, that does not show that risk and reward has been transferred. That does not really show that risk and reward has been transferred. Substance over for how does that show that risk and reward has been transferred? You're the one using it. That one is nothing. You are using it. Yes, we know. You are using it. That's lease. So it doesn't show that. I mean, we need two more. I'll give you one. The asset is a specialized asset that only the lessee can use it without modification. So I think that was what you were trying to say. Yeah, but the main word there is that is a specialized asset that only him can use it, right? So the asset is a specialized asset. The asset is a specialized asset that only the the lessee can use it without what? All these are indicators of a finance lease. Is there any question here? Any other one? Sorry? Okay, it's clear that there will be transfer of ownership. I agree with that. So I think that's why there's a purchase option. So I can take that. There will be transfer of ownership at the end of the what? All right, máa ṣetán 10 kó mo fẹ́ lọ jẹun. Yes. Transfer of ownership at the end of the what? At the end of the lease term. Okay. So that's okay. So anyone that does not meet this definitely will come in as what? As operating lease. So you will need to know these 5 for your exam. List these 5. Which is why you were the one that gave me almost all the points, not even me giving you. So, how do you, let's go to the accounting. Let's say if it's a finance lease, let's do this together, very straightforward too. So since we already agreed that for finance lease we have transferred ownership, risk and reward has been transferred, then it makes sense for that the first thing the lessor should do is to do what? Remove the assets from his books. Abi? Derecognize the assets. I mean, in line with our practice, what we have been doing since the beginning of the diet, what will be the double entry for that? Bank? Can be bank. You credit the asset, Abi? What do you debit? Thank you very much. Disposal. Yes. It's as good as you are disposing the assets. You credit the asset, you debit what? With the what? With the what? With the cost of the assets. Not with the carrying amount though. Asset account is always at costs. Asset account is always at what? Costs of revalued amount, depending on your model. So it's with the costs. That means there is still another account relating to the assets. That has to do with depreciation. That has to be removed too. That has to be removed too. How do you remove that? I'm still on derecognize the asset though. So I want to really teach you, not like I can just move on. Derecognize the assets. Let's move on. But you're an accountant. You need to know these things. Otherwise, I won't be happy with myself. You credit the assets. You debit what? Disposal. With the what? with the cost of the asset. Then the accumulated depreciation too, we have to remove it. How do you remove the accumulated depreciation? Accumulated depreciation is a credit. To remove it, you debit it. And credit what? You credit disposal account. You credit accumulated depreciation and you debit what? Disposal. Thank you very much. That means on your disposal account, what is there? The carrying amount. Because you have cost on the debit, accumulated depreciation on the what? Credits. When you look at the net in the disposal account, is the what? Is the carrying amount. Do you know what it's waiting for? It's waiting for what we call sales proceeds. It's waiting for what you're expecting to collect from the assets, which is the cash. Even though for lease, you know, you are not collecting the cash like that. You collect it over and over. But in our books, we will record it now, everything that you're expecting to collect now. And how much is that? What do we call that thing? You recognize a lease receivable, or we also call it net investment in the lease. Is a financial asset. It's a financial asset because there's a right to receive what? Cash. It's a net investment in the lease or a lease receivable. Do you know the double entry for this? This net investment in the lease would debit the net investment in the lease, Abi? And you credit disposal. This is a valuable knowledge you have today. 90% or 95% of accountants don't know this. They just say, "Yeah, do you recognize the asset?" "Yeah, do it now." "Yeah, recognize the asset." "Yeah, do it now." No, this is how it's done. From the beginning, do you recognize the assets? Meaning you remove the assets, the costs from the books. You remove the accumulated depreciation from the books. And whatever you're expecting to collect, which is the net investment in the lease, you debit that and you credit disposal account. Of course, on your disposal account, there will be a profit or loss on disposal that you take to P&L not OCI, and that ends that one. Then you will now focus on this one. No, net investment in the lease. Not bank. You're not collecting money now. There's a financial asset, a right to receive cash. Is a receivable. That's why I call it lease receivable. Lease receivable. Then what you should be asking me is that, how do you get this? I'm sure you know. How do you get this lease receivable? Is the present value of unpaid lease rentals, just like that one. That is it. Is the present value of unpaid what? Lease rentals. And also, you also add the present value of unguaranteed residual value. This has to be added here for you to get your net investment in the lease. And why are we adding present value of unguaranteed residual value? This one is clear because this was the same thing we did for lease liability. And I've told you when I was teaching you lease liability that guaranteed residual value is always included here. So I'm assuming that guaranteed residual value is already what? Inclusive of this figure. Guaranteed residual value because the lessee has guaranteed it. That means there is a possibility of a residual value to be what? Unguaranteed. In a way that it's only the lessor that believes he can get it. The lessee said, Me, oh, I'm not guaranteeing you this amount, oh. So it's just like there's a residual value of 50,000 that is guaranteed. But the lessor believes no, the residual value should be how much? 60. So that means there is a 10,000 that is what? Unguaranteed. Because residual value relates to future, we need to put it as present value. And why we are adding it as part of this net investment in the lease is because the lessor believes it's something he will get. It's part of his receivable. So you are saying, oh yeah, put it there. It's part of his receivable. Recognize it. So the net investment in the lease or lease receivable is the rent he's expecting and the residual value he is expecting, right? That nobody has guaranteed him. The one they have guaranteed him is inside here. Oh, is here. Oh. This one is the one they have not guaranteed him. So in the exam, when they give you this is the rent you are paying, this is the residual value, 50,000, but the lessee has guaranteed 40,000. They gave you rent per annum. They gave you residual value that all the residual value. They now say out of this, so lessee has guaranteed how much? 40,000 out of 50. Nobody should tell you. You need to know that the remaining balance is the what? Unguaranteed. The remaining balance. We will solve questions and you will see what I'm talking about. But this is the net investment in the lease. And again, at the end of the year, which is subsequent measurements, you are going to increase the lease receivable with what? With interest. And you are going to reduce the lease receivable with what? With lease rentals at the end of every year. And that is it.